Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off the new year with a look at the US dollar, which has begun to trend upwards after a decline in late 2025. This shift is largely driven by data that suggests the US economy may be stronger than initially thought, with a recent jobs report showing an unexpected fall in the unemployment rate and an increase in average hourly earnings. As we explore this story, it's essential to consider multiple perspectives. On one hand, the dollar's gains could be seen as a positive sign for the U.S. economy, indicating that investors are confident in its growth prospects. On the other hand, some analysts argue that the dollar's strength may not be sustainable, given the ongoing global economic uncertainties and potential shifts in monetary policy. To provide more context, let's take a look at some of the key factors influencing the dollar's movement. The Chinese yuan, for instance, has been appreciating gradually, which could impact the dollar's value. Additionally, sterling and the euro have shown a correlation with the dollar index, although to varying degrees. The Canadian dollar, meanwhile, may be experiencing corrective forces after a significant appreciation in late 2025. As we continue to monitor these developments, it's crucial to remain balanced and consider the potential implications for investors. While some may see opportunities in the dollar's uptrend, others may be more cautious, given the complexities of the global economic landscape. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of home equity lines of credit, or HELOCs, and exploring whether now is a good time to take one out. As we discuss this topic, it's essential to consider the pros and cons, as well as the current market conditions. A HELOC can be a great way to tap into your home's equity, allowing you to borrow money for various purposes, such as home improvements, repairs, or even paying off high-interest debt. However, it's crucial to understand the terms and conditions of a HELOC, including the interest rate, fees, and repayment terms. The national average for a HELOC is currently around 7.25%, but rates can vary significantly depending on your creditworthiness, location, and lender. Some lenders may offer introductory rates as low as 5.99% for a limited time, which can be an attractive option for borrowers. On the other hand, it's essential to consider the potential risks associated with HELOCs, such as variable interest rates, which can increase over time, and the possibility of accumulating more debt. Additionally, if you're not careful, you may end up using your home's equity for non-essential purchases, which can put your property at risk. To make an informed decision, it's vital to weigh the benefits against the potential drawbacks and consider your individual financial situation. If you have a low primary mortgage rate and a significant amount of equity in your home, taking out a HELOC might be a good option for you. As we continue to navigate the complexities of HELOCs, it's also important to explore alternative options, such as personal loans or other financing solutions, to determine which one best suits your needs. Welcome back to the Riskwiser Zone. As we close out today's show, I want to bring to your attention a developing story that has significant implications for the retail industry, particularly in the luxury sector. Saks Global, the parent company of iconic department stores, Saks Fifth Avenue and Neiman Marcus, is reportedly on the brink of bankruptcy. This news has sent shockwaves throughout the fashion world, with many independent luxury shoe designers and fashion houses bracing for impact. According to sources, a Saks Global bankruptcy would have a substantial effect on these designers, who derive a large percentage of their sales from the footwear category. In fact, some designers may see up to 40% to 50% of their business affected by this downturn. The situation is further complicated by the fact that many of these designers have already shipped merchandise to Saks Global but have not yet received payment. The potential bankruptcy has been attributed to a combination of factors, including a slowdown in luxury consumer spending, economic uncertainty, and stock market volatility. Additionally, Saks Global's acquisition of Neiman Marcus Group in December 2024, which included Bergdorf Goodman, has been plagued by integration issues. The company's $2.2 billion bond offering to fund the deal has also added to its financial woes. As the situation unfolds, it's likely that we'll see a significant downsizing of the Saks Global store fleet, with some reports suggesting that up to 40% of stores may be closed. This would not only impact the designers and brands that rely on Saks Global for sales, but also have a ripple effect on the entire retail industry. It's essential to note that the luxury market is not immune to economic downturns, and this situation serves as a reminder of the importance of diversification and adaptability in business. As investors, it's crucial to stay informed and adjust our strategies accordingly. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.